Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief.
Good morning, everybody. It is Friday, March 17th. Welcome to the morning brief. As you can see here, the 8:30 numbers are all Canadian numbers, no U.S. numbers. 9:15, we have capacity utilization rate and industrial production month over month. At 10 a.m., we have preliminary University of Michigan consumer sentiment and University of Michigan preliminary inflation expectations, as well as the CB leading index month over month. So by 10 after 10, all the news will be done and digested, and we have a limited amount of interest for news the rest of the day. Does that mean we will have less volatility? Absolutely not. It is Triple Witching Friday. Triple Witching Friday, which means it's the monthly futures expirations, monthly stock expiration, as well as quarterlies. And there is also Forex options that are expiring as well. So all kinds of expiry things going on today. Always want to note that those things can and do influence the market. A lot of monkey business on Expiration Friday special, especially triple witching. Looking at some charts here. So you can see that we had an update today. I think it's just kind of a relief rally that the banking scenario has been somewhat contained. First Republic Bank got a bunch of deposits from the big boys, JP Morgan, Morgan Stanley, and Wells Fargo. Put in about $30 billion in deposits into First Republic. What does that do for First Republic? That allows their capital ratios to be much better than they previously were. Gives the bank time and capital in order to not go into insolvency based on simply because of the capital. So that's a good thing, not to mention that the FDIC has already taken over Silicon Valley Bank. Also, we had the European Central Bank raising rates by 0.5 percentage point, basically saying we'll do everything we need to do to stop inflation, and we are not worried about any kind of Swiss bank issues or Credit Suisse issues. I believe Credit Suisse issues got a loan from the Swiss National Bank for $54 billion to again shore up its capital ratios. So even though it was downgraded by Moody's, I believe today, it is triple capital B. I can't keep those all straight, so can't even help you there. But that's what's going on with the crisis. So I think this was somewhat of a relief rally. Now, I'm not convinced that this is a new up leg. I think this is a relief rally, and it's certainly plausible for us to continue going down because rates are still going up, and rates will continue to go up, even with the somewhat dubious banking scenario. So I think the Fed will announce next week a quarter point as a just to say, hey, we're still raising rates, but we're only going to raise a very small amount because of the potential impact, et cetera, et cetera. Now, where could we go? We could easily see the highs from the 9th a week ago. Last Thursday, those highs were somewhere around 40.58, and on a really aggressive day, we might even see 40.99, 4100. I think that's a bit of a stretch, but it is possible. On the downside, easily see the low from yesterday, which was 30 895, and I can see us even coming down and testing what day was that? Wednesday's low of 3863. Taking a look at the inventory. Interesting. Yesterday we had correlation. What do we have today? Big update. What happened? It was up for most of the day, and at 2 o'clock they started selling into this rise. And we ended at 4 o'clock at positive 11,600. So technically, positive is good, but there sure looks like some divergence there. Some of the smart money taking some money off the table after we've had a day or two of rally, and certainly a day or two of bottom picking. Maybe these guys are cashing out. By the end, by 5 o'clock, was actually negative 4,500 contracts. So a little bit of divergence here. Interesting to see that happening going into a Friday, especially a triple witching Friday. Going on to the intraday chart. Intraday, you can see by the time here, I'm doing this the night before. I am not trading on Friday. I'm actually taking a travel day. It is spring break for my youngest, and we are taking a long weekend to drive somewhere, and I'll be driving all day on Friday. So no trading for me, but that's okay. You have to take a day off every once in a while. But I wanted you guys to have all the goods and the numbers, so here you go. So intraday chart, where is, on the top side, where is resistance? Definitely 4,000. 4,000's got to be on your radar. Then we have to really scrunch it down because it's just not real confluency. Or there we have some at 40.3850, 40.3850, and some more at 40.50. I'm sorry, what was that? 40.38, 40.38, and 40.58. That's what I'd be looking for on the top side. On the bottom side, we've got some support, 39.75, 39.56, and maybe a little bit around 39.43, and then it drops down to 39.25 if we get going to the bottom side. Stock Traders Almanac for Friday is positive 66.7, so a 16.7 bias above break even or above 50-50 to be a positive day. Remember, it is options expiration, and there will be additional monkey business going around. I hope you guys have a great weekend, and I will be back at the trading desk here Monday morning early. So I'll see you then. Have a great great weekend, and happy trading on Friday. Don't forget to subscribe if you haven't already, and if you have a comment, please feel free to make a comment. Remember that this is all in the endeavor to get you to go to my website, oneononetrading.com, where we primarily do coaching and mentoring, and that is one-on-one. Hope you guys have a great week. Bye.